businesses just like you. So let's have some tax talk for you with your host, Barry G. Fowler.
Hey, welcome and good morning. Today we're talking about how to put a solution in place with the IRS. Some people want to do it yourself. Hey, that's fine. We know dealing with the IRS can be very, very stressful, and that's why we use our expertise to, work for you in getting you the best plan solution in place with the IRS. And a lot of times saving thousands of dollars in the meantime while we're doing this for you. But, we got a lot of do-it-yourselfers, even me, out on a ranch, there are a lot of things I want to do myself, but a lot of times, my wife has got to call in somebody behind me to fix the problem, which I've made it 10 times worse, and it costs us more money to do it. Other times I'm able to put the solution and fix what's going on, without having to call somebody else for backup. So, we get a lot of questions. Can I do this myself? Yes, you can. I mean, the IRS forms are there. They have manuals for every single form. So you can go there and if you're going to use like our collection form that we're going to talk about today, one of the 433s, there are publications out there to do the 433 forms, and you can read through them, make sure you get everything that's supposed to be there. But a lot of what we do as well is put techniques in place to find ways to save you more money, change your financial profile so that it works within the rules of the IRS for the betterment of you. So you want to do it yourself? What forms do we need to use? There's the forms 433. And so you have the IRS form 433A, a 433B, 433F, 433H. Which collection information statement should you be using? So, the 433A is a collection information statement for wage earners and self-employed individuals. So, if you're running a small business, DBA, or, considered to be self-employment, you're going to fill out this form. And then they also have the form 433A OIC. And this is a specific version that's used when applying for an offer in compromise, which is an agreement with the IRS to settle your tax liabilities for less than the full amount owed. So you can see there are two different 433A forms, so make sure you're filling out the correct form when you're going to work with the IRS on collections. And we're going to come back to these forms and talk a little bit more how you're going to prepare them, what information is going to be on there. But we're going to start out describing each one of the different forms. The 433B, this form is used to provide information about your business, assets, income, expenses, and liabilities for an offer in compromise with the IRS. It includes sections for business information, partners, officers, LLC members, major shareholders, what cash, what investments, what real estate, what vehicles, what equipment, and any other assets that you may have out there. We tell people, if you're in business, whether you're running a Inc., LLC, a corporation, you really should have a very good profit and loss, income statement, and balance sheet that includes, all of your assets and everything out there. And your accounts should be reconciled within those books. So whether you're using QuickBooks or Xero or FreshBooks or anything like that to keep track of your bookkeeping, you should make sure that you've got a good balance sheet and income statement or profit and loss. Now, you're best to use somebody that knows bookkeeping and, take the burden off of you and let them do it. So if you're an owner operator, you want to give us a call and, work with us on doing your books for you because we know what a headache it can be. Um, so you're going to want to make sure that whatever you're doing, you're getting these things filled out. We have seen a lot of businesses that we have worked with to try to put solutions in place, and I mean, not just business debt, but personal debt, because when you have personal debt, you're going to have to fill out that 433B as well when you are an owner of one of those other entities out there. And a lot of times, we see businesses flying by the seat of their pants, and it's not the right way to run a business. So you want to make sure you got that profit and loss and balance sheet. Talking to a client just the other day, and they were like, well, we're good at running businesses, and well, we just can't handle all the paperwork. And I was sitting down talking with them and said, hey, what about your CPA that you're working with? Well, they don't really give us any advice. They don't really help us. But, we've built a business from, nothing to $1 million, and, we're getting ready to sell it. Well, what assets do you have? What liabilities do you have? What's going to be the profit? Have you put any projections in of what the taxes are going to be? And the answers to all that questions were no, nobody's ever told us. So, find a good consultant, whether it's a CPA, enrolled agent, that knows what they're doing in your industry and can help you, make sure that you've got the financial information you need to run your business. You may be great at setting up and getting a business started, but continuing to see where you're at needs that profit and loss and balance sheet. And then if you do have a tax problem, it's really needed to make sure that we've disclosed everything that's supposed to be disclosed to the IRS and in the right format and highlighting the right ways. So the next form is the 433F. The 433F is used to obtain current financial information necessary for determining how a wage earner or self-employed individual can satisfy an outstanding tax liability. You could go online and establish an online payment agreement with the IRS on their website. But this 433 is going to be an abbreviated form for, full pay installment agreement with the IRS. It just basically lays out your income and your expenses, and then we can go from there. So the IRS is going to use this collection information statements to gather financial information about your wherewithal, what you can afford to do. It helps them determine, when you're a delinquent taxpayer, what's your ability to pay a tax debt before approving requests for, even tax relief or temporary delay of collections. The 433 forms ask for details regarding, monthly income, plus your expenses, your assets, your what the value of your home, your real estate, cars, vehicles, bank accounts, investments, and much, much more. The IRS is wanting to make sure that you are disclosing everything. Now, what we mean by that is, the IRS will look at your history. So if you're just going for a full payment plan, the 433F is going to satisfy pretty much everything the IRS needs. If your income or your debt is over that $50,000 to $100,000, they may be requesting that information just so they can verify that you can afford this payment plan. If you're going to go for non-collectible status, that 433A is going to be required because it is more detailed and discloses a lot more information, on what is happening in your life. What is your wherewithal to pay this back? And same with the 433A OIC. That again is going to be disclosing a lot of information. Now, the IRS does a full check once you submit this for an offering compromise. So, if you're going for an offering compromise, the IRS is going to go compare everything to national standards. The IRS is going to go back and look at your history. So that means is if you are um, had cars and you gave them to your kids, the IRS is going to see that, or you sold them, or maybe you've pulled a bunch of money out of your IRA, the IRS is going to go in and find all that. So, the IRS is going to be looking at all this information so that, they know that you really qualify for this offering compromise or lower payment plan or non-collectible status. Hey, we come back. We're going to answer Tobias's question of what is the difference between an Inc., LLC, and a Corp. And we're going to do that right after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. One of the best things about doing this program is being able to answer questions. And if you connect with us at taxtalk4u.com, go in there and subscribe. We'll keep you up to date of what we're doing and what's going on and how we can help you. It's a great way to do that. We're going to be releasing here shortly our IRS playbook. And it's something that if you've got IRS tax debt, you're going to want to see. And so if you go over there to Tax Talk for You and subscribe, we'll be getting information out how you can access our playbook. So it's the IRS playbook, 3 simple steps on, basically solving your tax problem. Hey, but right before the break, Tobias asked, and I appreciate the questions and everything. So if you got questions, text us, send those in. But what is the difference between an Inc., LLC, and a Corp? Well, LLC is generally either single member or multi-member limited liability corporation. Those entities, if you're a single member, automatically will get reporting as a Schedule C, if you're self-employed. But you can make elections to be taxed as a corporation, which files an 1120. Or as a S Corp, which files 1120S. 1120 pays its own tax, and then you get distributions or dividends, and you pay tax on dividends. So it sets you up for double taxation. S Corp is going to be a pass-through entity. You'll be on payroll, and then you'll the net income from the business will pass through to you, and you'll be taxed over there. But it could save you a lot in self-employment. Inc., when you incorporate and you choose Inc. and you file for employer identification number with the IRS, they're going to automatically assign you to file an 1120. Same with the corporation. You're going to be assigned to file an 1120, which is that corporate return, and corporation would pay its own tax. You do have to file an election with the IRS, not with your state, but with the Internal Revenue Service to make the election to be taxed as an S Corp. And that way you can have pass-through income, and you can be on payroll. LLC, that could be a multi-member. If you've got another partner, that could file as a partnership, which is a 1065. And again, the net income passes through to you on a K-1 on your personal tax return, and you don't have payroll, but as an owner of the business, then you have what is called guaranteed payments whole big topic. We can talk about both S corps and multi-member partnerships and guaranteed payments, reasonable salary, and all that fun stuff. We've got whole shows that we can put on that, and we'll do that coming up. So again, make sure you subscribe to taxtalk4u.com. You want to make sure that if you are a corporation that you're doing everything right. Follow what was on that EIN letter, because we've just seen it. We're working with a company having to file 433Bs to get rid of huge penalties for many, many years because they filed incorrectly. And then it put them subject to penalties for failure to file and filing late. And now they've got bigger problems. We've managed to work with another company who did the same thing. We went back and filed 3 or 4 years worth of tax returns. Yes, they got hit with about $20,000 in penalties, and we actually were able to get them all removed, which was really nice for our client, getting reduction in penalties. So we want to get back to the do-it-yourselfers. Hey, if you decide, hey, you want to start out doing it yourself, hey, great. Remember, it's a 433A that for individuals and those that are self-employed that have tax debts. But if you get started and you run into a roadblock, you're just not sure you want to do this, hey, give us a call for that free consultation at 888-930-1016. So again, IRS Form 433A. Now, this is a document that the IRS requires if you owe taxes and you can't pay them in full. This version of the 433 forms is specifically for those wage earners, self-employed individuals. So if you want to resolve your tax debt for less than what you owe with an offer in compromise, then you must complete and submit 433A OIC. The 433A is a 6-page document to collect personal and financial information. What is this going to include? Well, it's name, birth date, social security number, driver's license, both you and your spouse, employment details for both you and your spouse, gross monthly income and expenses, personal assets, including home, cars, bank balances, investments, and lawsuits, if they're pending, if it's applicable. So they're going to be gathering all this information. So, we're going to take each one of these things here real quick and just go down this. So when IRS is dealing with this form, they're of course looking at all this information. So they're looking for who you're working for, how long you've worked there. Does the employer allow you to be contacted at work? And then they're going to be looking at how many people you claim as a dependent on your tax return. As far as employment goes, how often you get paid, what's your occupation, how long you've been with this employer. This is all the information that they're gathering. They're trying to build a case that you can't pay, is what they're really trying to do. And they go through and do the whole thing for your spouse. Now, just because you omit information doesn't mean the IRS is not going to find that information. The IRS is very, very good at going through and locating information that you don't put in. Now, remember, hey, one thing you do when you sign this document at the end is you're testifying that this is true and correct. So, make sure you're filling this out completely. And if you've hired somebody else to do this, make sure you read through it and make sure that it is complete as well. So the first section was all this wage and income information and everything. And then they're going to ask you questions. Are you party to a lawsuit? Are you the plaintiff? Are you the defendant? Have you ever filed bankruptcy? And they're going to want the date that it's filed, date that it was dismissed, date that it was discharged, petition number, and where it was filed. And then the next question is going to be, in the past 10 years, have you lived outside the US for 6 months or longer? And they're going to want to know dates and months that you lived abroad. If you can't, if it's been multiple times, you're going to want to make sure that you're using a separate sheet that will list out many more dates that you may have been abroad. Are you a beneficiary of a trust, estate, or life insurance policy, including those located in foreign countries or jurisdictions? Many times you don't know if you're the beneficiary to somebody's insurance policy besides your spouse. Maybe you don't know that you're the beneficiary of a trust or estate, but if somebody has passed away and you know it, you've got to list it here. And then you've got to list where it was recorded and the employer identification number. So if there's a trust set up and you are the beneficiary of the trust, and the trust is operating, it's not a revocable trust where somebody is living and you're not going to get it until they pass away. Those aren't going to necessarily count. So, but if you are the beneficiary, you're going to have to list where it was recorded, the employer identification number, the name of the trust, estate, or policy, the anticipated amount to be received, and when will be received. So they're looking for wherewithal to pay. Are you a trustee, fiduciary, or contributor of a trust? Meaning, do you have your own trust that you've been putting money into? And if you were a trustee of somebody else's or a fiduciary of somebody else's trust, you've got to list that on here. The next question is going to be, do you have a safe deposit box? Including those in foreign countries or jurisdictions. So you've got to answer yes or no, and then you've got to put the location out there. If you've got a safe deposit box here in the US, they definitely are going to find it. A lot of foreign countries now will also participate with the IRS and disclose information. So you want to be aware of that as well. And then the next question, in the past 10 years, have you transferred any assets with a fair market value of $10,000, including real property, for less than their full value? You got to answer this question. Now I'm going to explain to you what happens if you don't answer this question, or you answer this question no and you have. And we're going to address it. Consequences of how you answer this question right after this break.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools at 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Got a question here from Casey, and he's an owner-operator out on the road listening to the show. Thank you very much for listening. But do you help truckers solve tax problems? I owe close to $74,000 and haven't filed 2 years in taxes. Hey, Casey, yes, absolutely. We help truckers get out of the tax problems. That's where we started from way back in 2008. Taxation Solutions, Tax Relief started, and a lot of our clients were truckers, and a lot of them are truckers here today. We can also help you with your bookkeeping, here at Trucker Tax Tools. But you're one of these that I would tell you, don't try to do it yourself. Keeping up with the IRS while you're on the road doing what you do is very, very complicated. And, we always have great stories of people that worked for the IRS, and one of their favorite things to do was getting out there after truckers and repo and trucks. So, not to scare you, but it's time to get in front of that problem. So pick up the phone and give us a call for that free consultation, 888-930-1016, and let us get in front of that problem. Hey, we were talking 433A, and we're only on page 1 of this, and going through and looking at their questions they have, and the 11th question they answer asking this is, in the past 10 years, have you transferred any assets with a fair market value of $10,000 or more, including real property, for less than full value? So if you gave your child a car that's worth $10,000 or more, that's included. If you have property and you have transferred property or cash to maybe one of your children, this includes giving them money for college, and you've transferred them money over the years, you're going to have to disclose that as well. See, the IRS is looking for dissipated assets. What happened to the money that you could have used to pay them? You may have assets that you're not thinking about, but you've gotten rid of those assets. And so even when you've pulled money out of like a IRA or a 401k, the IRS is looking at that as a dissipated asset. Where did the money go? So we may have to break down where exactly this cash went to that you pulled out of your account. And then they're going to be looking at bank statements and everything else. So the next section we move into is personal asset information. Includes assets located in foreign countries or jurisdictions, and you've got to add attachments when you have more than a couple of accounts. So they're looking at your bank account, type of account, full name, address of the bank, account numbers, the account balance as of whatever within the last 30 days. Any investments that you may have, including stocks, bonds, mutual funds, stock options, CDs, retirement assets such as IRAs, KIOs, 401k plans, 403b plans, commodities like gold, silver, copper, includes all corporations, partnerships, limited liability companies, or other business entities which you are an officer, director, owner, member, or otherwise have some kind of financial interest in, no matter how big or small it may be. And you're going to have to list those investments here. And not only going to have to list those investments, but you got to give them what is determined to be the current value. If you have loans, so like if you've got stocks and you've got a margin account and you may have a loan, you have to list that loan there and then give what's your equity in that. If you've got digital currency, cryptocurrency, you need to list all of those currencies as well. Like I said, the IRS is looking for as much information as possible on you to determine your wherewithal to be able to pay. They're also looking at available credit. What credit cards do you have? What access to loans do you have? Do you have access to a line of credit on your house? They're going to be looking at that. Do you have, other cash available or other loans available that you can take out to satisfy the IRS debt? And they're going to look to you to go and do it. Now, there are some reasons to actually go through and do a line of credit on your home or something and pay off the IRS. And especially if you have the wherewithal to pay, sometimes that interest rate is going to be much lower on that line of credit or mortgage on your house than it would be continuing to rack up penalties and interest with the IRS. So, we've got to look at all that and make that determination. What is the best route for you out there. They're going to ask you if you have life insurance. Do you have life insurance of any kind? And especially if you have cash value life insurance. And so, if you do, they're going to ask for the name of the insurance company, the policy, who owns the policy, what's the current cash value? Do you have any loans outstanding on that balance? And then, you're going to subtract all that, and it comes down to available cash. So if you do have cash value policies out there, they're going to want you to pull cash from that to help satisfy your debt as well. Now we're going to get into personal assets, real property. So this is all the property that you own. So it may be your house. When you bought it, what's the fair market value? A lot of times we use Zillow to come up with what the current market value is, but market value may not be what Zillow has on there, because there may be repairs or other things that would bring it down that Zillow wouldn't have. But we've got to be able to support that. Now, if the IRS comes back and says your current fair market value is much higher than what you say it is, well, we have the option to go get an independent appraiser done. And once we get that appraisal, we can use that. But they're going to be looking at current loan value, what your monthly payment is, when's your final payment, and then they're going to get you your equity that out there. Now, if you're filing the OIC, then they're going to be looking at quick sale values as well. So there's a lot of different techniques to doing this to get you that solution, especially when it is an offer and compromise. But they want, your address, who your lender is, contact information, property descriptions. And if you have rental houses and stuff like that, they're going to want all of that information as well on each and every house. So, you want to be aware of making sure that you've got everything completely lined out here on this form, so that you're not missing anything. Because trust me, the IRS is going to search property records. Personal vehicles leased and purchased. That includes your boats, your RVs, motorcycles, all-terrain, off-road vehicles, trailers, etc. And they want year, make, model, license tag, a VIN number, when you bought it, what the fair market value is, loan balance, the amount of payment, when the final payment. Now, when you're going for OIC, they really only allow you to have, one vehicle for you, one for your spouse. Your kids don't count. So they could require, especially if there's equity in those cars, just sell them to access that equity. If there's no equity and you have debt, well, the IRS isn't going to allow you to take and use that debt and those payments to offset and say, hey, you can't afford to pay. Those things aren't going to account, as well as when you're doing offer compromise and you're paying for your kids' college or private tuition for high school or middle school or elementary school. Neither one of those count as well. It will count if you have them in daycare, because especially if it allows both spouses or you as a single parent to continue to work, we'll be able to get those things in there. But you've got to go through and list every single vehicle you have. Now, the next section the IRS is looking at is personal assets. It includes all furniture, personal effects, artwork, jewelry, collections, coins, guns, antiques, or any other assets. It includes intangible assets such as if you got patents or licenses, domain names, copyrights, mining claims. You've got to list all these things out there. Now, a lot of times in this section, we're going to skip it because, most people don't have major amounts of jewelry or have, coin or gun collections or art or an exorbitant amount of furniture. Some do. If you happen to be in that class, that's one of the things that we'll look at. But they do give you a pretty broad exclusion in this category. So you may not have to list everything out. Now, the fun part is monthly income and expenses, foreign and domestic. And so we're going to go over this section briefly when we come right back. We'll be right back after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Talking 433A, filing to get a solution or payment plan in place with the IRS, and all the different sections are building to this section where you're disclosing your monthly income and expenses, both foreign and domestic. They're going to be looking for everything. They're looking at your wages for both you and your spouse, interest, dividends. If you have self-employment, you're going to skip to sections 6 and 7 and go down and fill out the self-employment side to determine your net income from your business, so you can list your business income. If you've got rental properties, you've got to disclose rental properties. And so you're going to enter here your net monthly rental income. And so this is the amount after your ordinary and necessary monthly rental expenses being paid. You can't include here, when you're coming up with this, depreciation or depletion. If the rental income is a loss, you just enter a 0. It can't be negative. So you can't reduce your income because your rental is not paying for itself. Distributions. These are distributions from partnerships or subchapter S corporations that you get reported to you on a K-1 from limited liability companies. And that's going to be reported on either D or E. You're going to enter your total distributions from IRAs, if not included under the pension side. So if you're getting a pension, government pension, railroad pension, teacher retirement, you're going to list your pensions here for both either you or your spouse. If you're receiving Social Security, you're going to break down and show what you as a taxpayer has as Social Security, and your spouse has Social Security. If you're receiving child support, you've got to disclose that information, here as well. They are looking for all income that you have coming in, and that includes alimony. And then they give you a broad category for other income, which could include agricultural subsidies, unemployment compensation, gambling income, oil credits, rent subsidies, sharing economy, income from providing on-demand work, services or goods like Uber, Lyft, Airbnb, VRBO, and income through digital platforms like an app or website, YouTube, TikTok, reoccurring capital gains from the sale of securities, including, crypto and non-fungible tokens. So they give you broad categories. So they're looking for all income that you have. Then the IRS is going to come back in and start looking at your expenses. Again, the IRS generally does not allow tuition for private schools, public or private college expenses, charitable contributions, voluntary retirement contributions or payments, or unsecured debts. However, the IRS could allow expenses if proven they are necessary for the health and welfare of the individuals or your family or the production of income. Now, they lay all this out in publication 1854 for all the exceptions that are out there. So, to learn about those exceptions, you have to go out there and look what exceptions the IRS allows. But what the IRS is looking for is your costs: food, clothing, miscellaneous. This is going to be the total of food, clothing, housekeeping, supplies, healthcare products for 1 month. Miscellaneous allowance for expenses incurred is not included in any other allowable living expenses. Credit card payments, bank fees and charges, reading materials, school supplies, etc., would all be under this here. Housing and utilities. This is for your principal residence. It's whether your rent or your mortgage payment. You're going to put the average monthly expenses for property taxes, homeowners or renters insurance, maintenance, dues, homeowners fees, utilities such as gas, electricity, water, fuel, oil, trash collection, telephone, cell phone, cable television, internet services. This is all included in housing and utilities. Now, if you're running a business and deducting part of your cell phone on your business side, that portion of your cell phone can't be deducted here under housing and utilities. Next thing they're going to move is going to be vehicle ownership costs. And it's going to be total monthly lease or purchase loan payments. So, what are you paying on your vehicles to own them? And then you get a deduction for vehicle operating costs, total maintenance, repairs, insurance, fuel, registration, license, inspections, parking, and tolls for 1 month. Now, I'm going to tell you, don't exaggerate this number, because we get people telling us that they spend $500, $1,000 in fuel, and they drive a fuel efficient car or something. They're going to look at your bank statement and see, or your credit card statement and see, how much are you charging in fuel, and see that it makes sense. And so they do tie things back, as well as like payments on utilities and everything. They're going to be looking at your bills to determine, are you reporting this correctly? If you don't have a vehicle, they also give you an allowance for public transportation. For mass transit, whether it's train, ferry, taxi, Uber, whatever it is, you're using to get to work. They're going to allow you to take public transportation, or if you're on Social Security not working and use that to get to stores and everything else, they're going to allow you to do that. They're also going to give you out-of-pocket healthcare costs. And this is your monthly total of medical services, prescription drugs, medical supplies, eyeglasses, hearing aids, dental, all that is included. It's what you're paying out of your own pocket. So if you've got major out-of-pocket costs, you're going to want to detail it here and then provide the support behind it to prove it. Otherwise, they're going to give you a standard amount there to cover your deductibles and other stuff that you have coming could be coming out of pocket. And then your current year taxes, state, federal taxes that are being withheld from your salary or wages, or if you're self-employed and you're paying in estimated taxes. Now, you got to be paying estimated taxes if you're self-employed. Word of warning here. If you're going for an installment agreement, or you're going for a partial pay installment agreement, or you're going for an offer in compromise, and you are self-employed and not having taxes withheld from your W-2 wages, the IRS is going to require you to have estimated tax payments paid in. And so as you go through the year, you're going to have to prove that you have enough estimated taxes to pay your taxes, or at least the minimum required based on your situation. So, we want to make sure that, you have that detailed out, and we know that this is being paid, correctly. Now, if you've got a downturn in income and you're filling out section 6 and 7 for self-employed, you would be able to go back and recalculate actual estimates and prove that you've paid in the actual amount for estimated taxes. So you want to make sure that you're doing that. So briefly, when we start getting into filling out these forms, and we're just going to prove to the IRS you need a lower payment plan. This is the form 433A we're going to use. We're going to go through all this with you, and we're going to gather all this information. Now, if you're doing an offer in compromise, you're also going to be subject greatly to national standards. So if your mortgage payment is really high, you may be limited in what you can deduct there. So, I strongly urge you to work with somebody when dealing with the IRS. It takes a lot of stress off your back. We here at Taxation Solutions, our expertise is very wide and deep in dealing with these things. We help people restructure sometimes their life and their financial situation based on the 433 to get them the better deal as we go through this. Whether your income is too high, then we've got to look at other strategies to put things in place. So I strongly urge you, if you have major tax debt, $10,000 or more, give us a call. Go through that free consultation. Let's talk about what can happen and what we can do, for you to make your life easier and better. And those are the kind of things that will help you down the path to financial freedom. So, one of the things that I ask everybody is it fun dealing with the IRS? No, absolutely not. Is it stressful dealing with the IRS? Absolutely. When you start dealing with the IRS, you've got the stress of everything that is happening, and you've got to answer the questions, and you've got to do rapid fire, and then you've got to provide the information. So, we strongly get somebody, whether it's us or somebody else, get help. Now, we've got a playbook coming out. I've told you about this in the beginning, and we have IRS playbook. It's going to be released here shortly. The website and everything is done. It's just got to be updated and released. But if you subscribe to taxtalk4u.com, again, taxtalk4u.com, we'll get the information out as soon as it's available. You can get in and download the playbook. 3 simple steps to solving your IRS problems and putting a solution in place. Hey, that's one of the best offers that I can give people out there, showing and giving you the expertise of me, my staff, at dealing with the IRS and getting that solution. So again, taxtalk4u.com, subscribe there. Let us help you. Make sure you're back here every single week, 10 a.m. Eastern time at W4CY.com, W4CY radio app. And again, if you tune in to Tax Talk 4U every Monday at 10 a.m. at taxtalk4u.com, you'll have the information and subscribe and be right here. And next week, we'll have some bigger surprises for you as we go on getting a solution, maybe that wonderful offer in compromise, the pipe dream of everybody, of settling for less than what you owe the IRS. Hey, have a God bless week, and look forward to being back here with you again next Monday at 10 a.m. right here on W4CY Radio, taxtalk4u.com. Thank you. Have a great week.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at TaxTalkForYou.com. See you next week at W4CY.com.